Checking in on the U.S. dollar, climbing today but pulling back from its intraday high here. The dollar gaining initially on President-elect Trump's vow to impose tariffs on China, Canada, and Mexico. And you may be watching your screen saying, hey, a strong dollar sounds good. And it certainly can be good. A strong dollar means that your money goes further when you travel abroad. It means U.S. consumers benefit from cheaper imports. But too strong of a dollar can come with some risks. Here with the story, we've got Yahoo Finance's Jared Blikre with the breakdown. Hey, Jared.
Thank you, Brad. They call it the dollar wrecking ball for a reason. And let me just show you the charts. I brought the Wi-Fi Interactive right here to the desk. So let's show what has happened this year in what's called the DXY, the U.S. dollar index. And all it is a weighted average that kind of favors the euro and the pound more than we would if we were doing this on a trade weighted basis. But this is something that everybody's looking at. So here's the dollar index this year. And you can see we had this huge run up. About half of that was since the election. And this is presenting some problems for risk assets. And multinational corporations, they get about 40% of their international revenues from abroad, and a stronger dollar hurts that. But let me show you a 5-year chart and just show you technically we just broke out of this multi-year range. And that's giving some investors, some corporate planners here some headaches here. And if this were to continue, that would provide additional pressure on not only risk assets, but on some other areas as well. And I should mention, I just sat down with Raoul Paul along with Sydney Freed here, our producer, and we were talking to him on Stocks in Translation about the potential for the US dollar to interfere in international relations. And it also has implications for countries that borrow in US debt. Let's take a listen.
When a dollar is too strong, we talk about the dollar wrecking ball.
Yes.
Because what happens is, in a world that borrows a lot of dollars, the dollar that's expensive means it's difficult to get enough dollars in the system to pay off global debt. So we've seen, for example, China's real estate sector. It's mainly a dollar borrower. When the dollar's expensive and they earn in yuan, it's difficult to pay the debts. So that tends to what happens when the dollar is high, and what it does is withdraw liquidity from the markets, because so much of your extra expenses are in servicing of those dollars. So when the dollar liquidity comes, it can start to slow the economy and particularly markets, but it is forward-looking. So the recent strength in the dollar and the strength in rates probably leads to some sort of market correction towards the end of the year, beginning of next year.
So you heard it here, maybe a little bit of a market correction as that dollar, that strong dollar kind of lags and influences the market later this year or early next year. Want to leave real quick with central bank policy rates around the world. This is another dynamic here. And we have on the very low end, central bank over in Japan, that's the Bank of Japan, their rate is 0.25%. Right here in the US, it is 4.75%. That's right here. And in other countries like Mexico, it's 10.25%, even higher. But these interest rate differentials throughout the world also affect U.S. dollars, strong dollar policy. So in brief, there's a lot to be done and a lot to wrap our heads around as we have this new administration, as we digest all of their new tariffs and all these other policies.
Jared, thanks so much for breaking this down, all of the movements and machinations around the greenback here. Appreciate it. And you can see more of Jared in Stocks in Translation, new episodes every Tuesday and Thursday at 8:30 a.m. Eastern Time on Yahoo Finance or wherever you get your podcasts.